Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The one big tech stock that I think is still really intriguing right now is Alphabet. This is a company that has a dominant position in its market, search market, and advertising on the internet. But yet, investors don't really seem to think that it's going to be able to fend off new competition, and it's trading at a fairly reasonable valuation. So, I want to dig into exactly what this company might look like in 5 years and why this may be a great buying opportunity. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out an event I'm doing on August 18th in the DC area called the Money Collaborative. There's a link to that in the show notes. Now, I want to start by putting some context around Alphabet's performance and growth over the last 10 years. This is a chart of Alphabet's revenue and free cash flow growth over the past 10 years. You can see that both have grown over 400%. Now, that may not be repeatable over the next decade, but it's clear that this is one of the tech companies that just continues to grow year after year. And so, as we look into its businesses, I think it's important to put some numbers behind just how well these businesses are doing, because I think the momentum is still behind a company like Alphabet. So, let's go through what I like about the business right now. This is Alphabet's revenue over the past 3 months, so just the first quarter of the 2023, and you can see that a vast majority of the business is in advertising. Most of that falls under search, $40.4 billion in search. Just think about how big that number is, $4 billion per quarter in search revenue. And then YouTube ads, where you're watching this right now, nearly $7 billion YouTube ads. The Google Network, which is the other advertising services that are basically related to the core search and advertising business, that's another $7.5 billion worth of revenue. So those three things all kind of work together because it's the same basic ad business where Alphabet has people coming to their platform, whether that's search or YouTube, and then they're able to use all of the data that they have about both advertisers and what people are viewing, what their interests are. They're able to match up those advertisements with the audience that they're serving. That's where they generate revenue. That's where they have the most value. That's why there's such a big network effect from both a user and an advertiser side for Alphabet's platform. And right now, I don't see that going away. The other businesses are another $7.4 billion in revenue, continue growing. Google Cloud is now $7.5 billion in revenue. I think we can expect that to continue to grow, but I'll talk about how much money they're making there in just a second. And then Other Bets is a relatively small business, $288 million in revenue. I'm going to get to one other bet business that I'm pretty excited about. But let's go down here to the operating income side, because I think this really tells us where Alphabet's money is coming from. Google Services, $21.7 billion in operating income. So again, that includes advertising and other. That's the whole services business. So massively profitable business there. The cloud business just became profitable on an operating income basis. So that's not really contributing much to the bottom line. And then Other Bets are really just a cash burning machine, $1.2 billion in cash burned there. Corporate costs are another. So the driver of the business is really this segment right here, Google Services. And if we think about the internet and where it is and where it's going, I just don't see anybody knocking off specifically Google's advertising business. Now, search is what drives most of that. And search has been the thing that I think has been kind of under question over the last few months as new things like ChatGPT and artificial intelligence have really come to the forefront. Is that going to be changing how we search for information? I think right now what we're seeing is that it's probably not going to. There's maybe going to be additional use cases for those kind of services where you want to ask a question of a virtual assistant or something like that. But my view on this right now is that this is more of an expansion of the market rather than taking market share away from search. I think we're still going to search for a lot of the things that we used to search for. When there's specific information that can be answered by artificial intelligence, maybe that's just a new use case. And it's probably likely that Google is going to play a big role in that, whether that's through Bard or one of their other services. They're going to be able to integrate artificial intelligence into things like Google Docs, into search, into Gmail. The company has multiple products with over 1 billion users. And so I think it's crazy to think that all of those products are going to be disrupted by new companies in artificial intelligence. Right now, it appears that AI is going to be more of what we call a sustaining disruption, meaning that it actually makes the big players stronger. I think that's what's going to happen with artificial intelligence, specifically over the next 5 to 10 years. And so I think these cash flow machines, these major money makers, are not going to be going away anytime soon. The one business that I think still has a ton of potential for growth is where you're watching right here, YouTube. YouTube is the one platform where small creators can put any kind of video up and match with any kind of audience, and a massively sized audience, over 1 billion users on YouTube. That's going to be a business that's going to be almost impossible for any other platform to disrupt. And as a result, it's going to attract advertisers and content. That's kind of a flywheel that YouTube can use to make money on this business. The great thing for Alphabet is they don't have to decide what that content is going to be. That is up to the creators. That's not a decision that a lot of competitors like Netflix or Disney have. They have to be the curators of that content, but YouTube doesn't have to do that. Anything that is successful is going to be good for YouTube. So that's going to be a great position to be in. I think that's a business that's just going to continue to grow. It'll be a little bit lumpy because the advertising is not necessarily growing in a straight line. But YouTube is something that I think it might be underrated by a lot of those in the market today. And one of the other bets that I'm really excited about is Waymo. I think autonomous driving is going to be a huge piece of the future. And Waymo has a very interesting position, very different business model than a lot of its competitors. Maybe the kind of company that licenses its technology to other companies to build out ride sharing services or self driving in cars that you're actually selling to consumers or businesses. And the first partnership that is really notable is that with Uber. This is really a natural partnership. Uber had to get rid of its self-driving business, its self-driving research a couple of years ago. And so now they're leaning on Waymo. They're actually using Waymo vehicles in Uber in the Phoenix area. So that's just an early test, but long term, I wouldn't be surprised to see maybe Uber buys Waymo or merges with it or licenses the technology. I think there's a lot of optionality there for Waymo because they are one of the leaders in self-driving technology, and there continues to be a lot of money put into that. So long term, that's a business that I don't think investors should overlook. Now, shares of Alphabet are trading for about 26 times earnings. That is not a cheap price, but remember, this is one of the dominant tech companies in the world today, has grown revenue over 400% over the last 10 years. I don't think that is going to be the growth rate we're going to see over the next 10 years. But if Alphabet continues churning out cash and even one of these other bets like Waymo pays off, this could be ultimately a great value stock and the kind of company that you want to just buy and hold long term. So where's the company going to be 5 years from now? I think we're still going to be searching. That search bar may look a little bit different. There may be more artificial intelligence in it. Maybe it'll be even ingrained in a lot of the products that we're using on the internet, like Gmail, like Google Docs. But I don't think that core business is going to go anywhere. YouTube, I think, is going to be a growth machine and is actually one of the best positioned media brands right now. And then one of those other bets, like Waymo, I think is going to really gain some traction over the next 5 years. So this is a stock that I wouldn't mind adding to right now, but on any sort of pullback in the market, this is definitely on my short list. So what do you think about Alphabet stock right now? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.